We're going to go over 6 tips that's going to help you become a better trader. And I sure need to listen to this because I had a pretty bad week in the stock market this week due to very small mistakes that cost me tens of thousands of dollars. They were so small that it should have never happened, but it did, because tip number 1, do not rush, take your time. It's very simple, people. Make sure you go over your purchase order on the shares you're buying, whether it be straight up buying shares or stock options. Make sure you have the right expiration date. Make sure you're buying the right amount of shares. Make sure you're buying it at buy open, which is the default setting for most trading platforms, which means you're buying the share at the exact time for the exact amount that it's at right then and there. And I talked about this on another video previously yesterday that I did on GME, which is GameStop. I did a put for $105, and a put is where you bet on the stock market going down. Well, I didn't take my time. I rushed it, and I thought I selected buy open, but I did not. I selected sell open, which means you're selling it at the price it's at right now, and they're giving you money for it up front. So you're getting profits right then and there. The problem is with that, you still own the shares and you're still responsible for what happens. So if you bet on it go down and it goes down at that point, you're going to go ahead and lose money. And I lost like $6,000 because it plummeted past the 105 mark. And I talked to E-Trade customer service, and they said I wasn't even verified to do that because I'm only a level 2 trader account and need to be a level 3. But they said that due to the cash that I had in reserve, that they allowed that to happen, even though it was an accident. Too bad, so sad. Have a nice day. Is there anything else we can help you with? Is what they told me. So don't rush, take your time. And that goes to anything else in the stock market. Make sure you have, the candlesticks studied. You know what the candlestick patterns are. You know how to read the candlesticks. The volume sticks as well. You need to learn what the volume sticks are. Bullish and bearish volume sticks, bullish and bearish candlesticks, the advanced patterns, things of this nature. You need to take your time. Don't rush. Learn all the aspects first before you get into the stock market, because if you don't, your education will cost you a lot of money, because you're going to lose a lot. And that's how we learn, is by losing. But you don't want to learn that way. You want to learn the right way, which would be taking your time. Don't rush. Study, and make sure before you purchase stocks that you have the preview of the purchase order. And before you accept that button, you make sure that 2 to 3 times double check it. Doesn't matter. Double check it, and make sure you do that before you click the order button. Okay, that just take your time. Don't rush. That's anything in the stock market. Number 2. Stick to what you're good at. Okay, there's 4 different types of trading. You got day trading, position trading, swing trading, and scalping. You got to learn what those positions are. Figure out which one you're actually good at, because like the hardest one is scalping. Scalping, you have to make super fast decisions, and a very minute mistake can kill you in scalping. You got to be fast, and you've got to, and with scalping, you've got to have a lot more capital to work with, because you're making bigger bets on one stock, and you have to buy and sell at different points of the candlesticks. Like it's gonna be very small movements that you're going to be buying and selling from. You're not waiting on big spikes and big dips. You're profiting on the small movements of the candlesticks. That's what scalping is. Okay, so just learn each one. Day trading, position trading, swing trading, scalping. Figure out which one you're good at and stick to that. Number 3, focus on your plan and do not deviate. And that just means that you just need to stick to whichever one you're good at and don't change it that day. So focus on that one trading strategy and don't change it halfway through the stock market day. Okay, you just got to stick to that and focus on it. Number 4, build rules and be disciplined. So you want to You want to figure out which trading strategy you're good at and set rules. So for instance, let's say I'm a swing trader, okay, which that's what I usually do, swing trading. So I have rules set in place so I don't have a lot of loss. But unfortunately, this week has been a disaster, but it doesn't matter. So I've made new rules. And for instance, some of those rules would be like setting a stop loss on your call, so you don't lose more than what the stop loss is set at. So say for instance you buy a call and you don't put a stop loss. If you're not watching that all day long, the stock can make a total change and crash, and it's not going to automatically sell it, and you're going to lose a lot of profits, or you have to hold it for longer and hope that it goes back up. So there's just you guys got to set a bunch of rules for your actual trading strategy and stick to those rules so you don't have a lot of losses. So it's called capital preservation. You got to make sure you preserve your capital by any means necessary, so you can continue to trade and make up for losses if you do have losses. So you got to set those rules so you don't have as many losses, you don't make as many mistakes. Number 5, do not trade with emotions, trade with your rules. And it's exactly straightforward. You stick to the rules that you have in place, and you can't control what the stock market does. So you can't get angry at it if it's not going the right way. So you have to stick to your rules so you can have the capital preservation in place. That way you don't lose. You want to minimize your losses by trading with your rules, not your emotions, because the emotions are going to make you tilt. It's like gambling in the casino. You get so mad, you lost so many hands of blackjack, and then you get so pissed off, you have a little bit of money left, and you put it all in the circle, and you're praying for that blackjack to happen, and it's more than likely not going to happen. So you have to stick to the rules and do not trade with emotion, okay? And number 6, adapt and learn to be better each day. And this week I've learned a lot. I've learned a lot of things that I woulda, shoulda, coulda done that wouldn't have made me lose a lot of my portfolio. But whatever happened. So now I have to sit here and come up with a new set of rules, and that's what I've done. And I'm trying to hand that off to you so you guys can come up with your own solutions and your own rules and your own ideas and theories to set in place to help you minimize your losses and keep the capital preservation so you don't blow out your whole portfolio because of emotions. And emotions can definitely do that for you. That's why that number 5 is extremely important. Number 5, which was again is do not trade with emotions, trade with your rules. Stick to that, and these 6 tips should help you become a better trader. Stay tuned for more information. Keep grinding. Is not a easy road to millions of dollars like people think, that you're just gonna go get in the stock market and become a millionaire. It's not. It's like anything else. It's a business. You have to have rules in place for this business, and you have to control the business to where you can be successful. So those are 6 tips to help you become a better trader, guys. Stay tuned for more information. Hope your trading goes well. Just stay smart, guys, and learn and adapt every day. Peace.